Well, here's a clue for you. Let's take a look at Country Garden dollar bonds. They've rallied 404%. Is this rational, sustainable?
What a return, what a trade. I mean, these bonds were trading at very much distressed levels, as was the majority of the market. So it doesn't take much to get that kind of return. But Paul, really looking for a bottom in the property market. This is the longest downturn in the physical market in China's recent history. And home sales are likely to continue to decline. Prices are still declining. We do get data around mid-December to really show whether that has slowed down at all. But this will take time, and the measures to support the property market are not yet feeding through to demand. Obviously, that's a COVID zero story as well. But when you look at the bonds and you look at the stocks, it's not just the bonds, Paul. Stocks of property developers rose 61% in November. That's quite a return as well. It's a very speculative market, but these securities were trading at such distress levels that just vocalizing support for the sector can get you these kind of gains.
So markets pricing in that turnaround. What are economists watching?
So actually, there was an interesting note out from Goldman Sachs that says markets have only priced in 40% of the China reopening story. And that's, markets do tend to get ahead of themselves, get ahead of the story. The data in the near term will continue to be rather weak. And that's because, obviously, the reopening story hasn't yet happened on the ground. But economists are looking for recovery next year, definitely better growth than this year. This year is looking at around 3.4, 3.5%, far short of Beijing's target. But a recovery next year and a full reopening around April, March is what economists are calling for.